Hey, ladies and gentlemen, Steve Ferguson here, your modern mortgage loan advisor. Today, we're going to go from beginning to end, from the application process all the way through closing on your mortgage loan, what it looks like, setting expectations, all those good things. We're going to start right now. Now, before I get any further, please like or subscribe, post some comments about what you want me to do videos about, and I'm going to take care of that for you. All right, step number one in the loan process is getting pre-qualified. So the way that you do that is you complete a home loan application. So what that application is going to do, it's going to ask you some questions. Where have you worked for the last 2 years? Where have you lived for the last 2 years? What do your assets look like? Do you have bank accounts? Where's your down payment coming from? Do you have any 401k? Talk to me about your income. So when we gather all that data along with a copy of your credit report, then we can analyze your debt to income ratio. So what that means is we take a look at all of your debt and we compare that to all of your income. So for example, if your income is $1,000 a month, a 50% debt to income ratio means that half of your income goes to debt. That'd be $500 a month. So there are certain parameters that every person must meet in regards to the mortgage process regarding debt to income ratios, credit score, income, etc. Now, with the credit report that we pull on that loan application, we're going to evaluate A, credit score, like I just said, B, all of your debts that you pay money on. That could be a credit card, a boat, a car, student loans, if you've got judgments, collections, etc. All of that gets analyzed at that point in time by the loan officer. And then we put all that together. We make sure that based on that verbal information that you provided to us, which programs it fits, and we issue what's called a pre-qualification letter. This means that you haven't been fully approved yet. It just means that you've been pre-qualified, okay? That's the letter that you would need to make an offer on a home. It doesn't have to get any more complicated than that. That's the basic of the basic. We're gonna run it for automated approval, most likely if it's a traditional loan, and just check the box that says you're pre-qualified. Now, the next step, we start digging into your loan a little bit more. We're gonna gather your loan documents. We're gonna actually need in writing W-2s, 30 days of pay stubs, 2 months of bank statements, all pages, all accounts, any asset information of where the money is coming from for down payment. We may get clarity on some items on your credit report. We'll get a copy of your driver's license. We may need copies of Social Security awards letters, or if there's a divorce decree, a bankruptcy, anything like that. We document all of those items. And then what we do as loan officers is we compare what you provided to what you put on the loan application. And we make sure that it all matches. If it doesn't match, it may impact your ability to get pre-qualified. But assuming it does match and we've got all the information that we need, we'll submit your file to full underwriting. That means we send it to the lender, and the lender is going to review that paperwork. In most cases ahead of time, before you're under contract. We call that our golden ticket loan approval. There's a great video I have for that. That you guys may want to check out. That sets you up for success when you're making offers on a home. Now, this doesn't have to be done before you make an offer on a home. It just makes your offer stronger, and it sets it apart when you're comparing yourself to other offers that may be out there on the same property that you love, right? So we verify all that information with the underwriter. Underwriter goes through it, reviews it, and says either yes or no, it doesn't match. And then if it does match or match close enough, they're going to issue what's called a conditional approval. All right. So that means subject to certain things, like in this case, you don't have a house contract yet, but subject to you getting under contract, subject to the appraisal coming in good and the title being good, etc., then you should qualify for this mortgage loan. Okay. That's about as close as you can get to a full approval, short of you having a home and being under contract. Now we issue what we call our golden ticket loan approval, which is a different formatted letter that makes it very clear that you are fully approved, ready to rock and roll when you're making an offer on a house. That way that listing agent knows when you're making that offer that yours is probably the best one that they're going to see. And that gives you a lot more weight when you're making those details. So make sure you get that golden ticket approval. So you're making offers on houses, and now the next step is going under contract. So a contract means that you've got a written agreement that your buyer's agent is going to help you fill out, and you're going to make an offer on a piece of property. You're going to offer $200,000. You're doing it on a certain program with a certain down payment. You want the seller to pay certain closing costs like title or survey, or maybe just closing costs in general. Then those are all things that you put into the purchase contract. That way you can negotiate that out with the seller and make sure that you're getting a great deal And then the seller on their side with their listing agent is making sure that they're getting a great deal. And then you guys all come to terms in the middle and say, okay, we agree to this. Most purchase contracts give you 30 days from the moment they sign the contract to the day that you close. And that's about the normal time that most lenders will need in order to get all the process worked out. Now, the good news is if you've already gone through the golden ticket process, we already have a lot of documents in hand that puts you ahead of the game. You're moving faster, you're moving smoother. It's just gonna be a lot more efficient process. If you haven't provided those documents yet, that loan officer is gonna need to gather those documents to make sure that they fit the box. Now, contract comes in, we plug in all the data that that contract represents into our system. Okay, we make sure that the address is correct, the purchase price, down payment, the program, the closing costs, etc. We update everything, we rerun everything to make sure that it works. Assuming everything looks good, then we repackage that file and submit it to underwriting. Now, before we submit it to underwriting, get a little ahead of myself, we're going to send out disclosures to you. So those disclosures are a stack of papers that protect you. It gives you all of your details and data that you're going to need to know what you're entitled to, how your information is protected, what we do with your information, an estimate of closing costs, an estimate of mortgage payment. All of those details are done in the very beginning so you have a good idea of where we're going to stand. Now, that information is not finalized by any stretch at that point in time. It's just the basic information that you're going to need to get a general idea of where things are. As we continue to move forward in the process, we're going to finalize some of those numbers. So, for example, you're going to get a homeowner's insurance quote. We probably don't have that yet when we issue disclosures, but once you get that, we'll plug in those real numbers. We'll also need a tax certification from the title company or escrow office that says these are the property taxes we're supposed to collect on this property. Then we plug that data in as well. And you get updated documents as we continue to move forward in that process. So that way you can see updated numbers as they come out. Okay. So you sign all those disclosures. We usually recommend you sign those within 24 hours. You have more time than that if you need to, but we want to stay on schedule. We get those documents back in, we package that with all your paperwork, and we send it into underwriting. Now, once the underwriter reviews the file, and as this process is going on, we're doing things on the backside to make sure that everything is taken care of. So, for example, we're ordering a copy of the appraisal. So the appraiser is somebody who goes out and reviews the property to make sure that it's worth the amount of money you're paying for it. So they're going to look at the property, they're going to measure the property, they're going to take inside and outside pictures and make sure that everything checks the box, everything's copacetic, and they're going to issue an appraisal back to us and to give us a value and detailed information, etc. That can take a little bit of time. A lot of times appraisers can take, 5 business days, 7 business days. It just depends. And it also depends on the program. It also depends on the location of where the property is, because if it's out in the country or out in the middle of nowhere, it may be harder to get an appraiser out there. We also get a survey. So a survey is the boundary lines of the property, and it says, these are the actual boundary lines. We make sure that there's no encumbrances or anything to the survey. Like, for example, if the neighbor's fence is over on your property side, or if your fence is on the neighbor's side, the house, God forbid, happens to be across the build line. Those are all problems that have to be fixed in the very beginning. So that survey is going to be important. In some cases, the seller provides a copy of that survey. In other cases, we've got to order one. And if we order one, it takes, 5 business days, 10 business days. It just depends. So that 30-day period can get eaten up as we're waiting for third parties out there to get the documents and everything put together. Now, while this is going on, our underwriters are underwriting the loan, and they update the conditional approval, and they come back and say, yep, got the contract, got these updated details, and the file is approved subject to these items. Now, right now, remember, we're probably waiting on the appraisal and the survey. So those will be 2 things that they list, but they could want clarification. So for example, if your paycheck stub shows something on it that didn't match the first time, then they're going to want clarification on where that came from. If you have a large deposit in your bank account, like your normal deposits are $3,000 a month, and all of a sudden you deposited $10,000 in cash, they're going to want to know what's going on. Where did this money come from? Because there's rules and regulations regarding documenting all of those data points, right? So we've got to make sure that they're all taken care of. So as we get that conditional approval, our team is going to create a list that we're going to be talking to you about as the consumer to say, hey, we've got these questions. Let's see if we can get these answers. Now, sometimes these answers are very black and white, very straightforward to get the answer to. Other times there's gray. It's like, you know what, here's what happened, and I've got to figure out a solution for that. And it's our job, the more knowledgeable we are, the more options we have in order to get those things corrected. So we pride ourselves on being knowledgeable in this process to make sure that you guys are set up for success. So chances are we've seen what you've got going on before, and we've got a solution for it. So we'll walk you through what that solution looks like. Make sure that you can meet that solution. And in the meantime, that appraisal and that survey, tax cert from the title company will be coming in. The title work will be coming in. So the title work is information from the title company, and that goes over the actual title on the property. It makes sure there's no encumbrances on title. So for example, the last thing you want to do is buy a house that has a lien against the house you didn't even know about. So title goes in and verifies there's no liens or outstanding liens, that the names are in the right names, that they're filed in the right spot, and they ensure, the title is an insurance policy, they ensure that the title is clear, correct, and ready to close. Okay, so we get the title work back and any additional information that we need on the file. Then we package all those things up and we send them back to the lender. Now the lender at this point in time is going to review all that information for what's called a clear to close. So assuming everything checks the box that they've requested, they should clear everything and say, okay, congratulations. We agree that you fit the program. We're issuing a clear to close. Okay. Now a clear to close just means you now have the ability to close. There's a couple things that happen between that point in time and closing. Number one, you have to sign certain closing disclosures. Those disclosures have to be done a certain period of time before you get to closing. Some lenders issue those early on, like us. Others wait to the end and the clear to close gets issued and then they issue those things. So those documents will come out. Your lender's going to notify you about those things and let you know what to expect and how to sign those things. But those are some of the final documents that you'll be putting together in order to get to the closing table. Once that's all completed and the closing date is scheduled, you guys are going to show up to title or escrow or the realtor's office or the lender's office or wherever it is that you're going to close. And you're going to sit there with probably a notary or an escrow officer or somebody that's approved to help you sign those documents. And they're going to go through each document step by step, and they're going to explain each piece to you. And then as they explain those pieces, you're going to sign the document stating that you understand it, that you agreed to it, and you're ready to move forward and take possession of your new property. That closing process generally takes 40 minutes to an hour, depending on how many questions you have. It's pretty straightforward. It's a fun time because you're right there at the very end, getting really close to being in your home. Then once you guys sign, they'll also have the seller sign to make sure all their documents are right, and then they'll gather money. So if you have any down payment or any money you're bringing to closing, you've got to have that at that time. You need to check with the title company in advance before you bring any money because they don't always accept checks, right? So they may want a wire, they may want whatever, but you need to check with those things up front to make sure you deliver it the right way. And then the seller is either bringing money to the table or they're getting a big check back from title if they've got some equity in their home. And so all of that gets coordinated, and then they do what's called a fax for funding. That's usually how it works. Or some lenders will do table funding, or there's different variations. But the title company will get those closing documents to the lender. The lender will check off all those documents and make sure that A, they match, B, everybody signed the way they're supposed to sign, C, the signatures match what the lender has on file. And that's to protect you guys, to make sure there's no fraud out there. And then assuming everything does match, then they issue what's called a funding reference number, which is a number that tells the title company you're good to fund. Here's the number. You should have money in your account. Title, fund it. Once title funds it, guess what? You get keys and you're done. Now, after closing, you get a lot of things in the mail. Be prepared. Most of that's junk. Check with your lender. Check with the escrow company, check with your realtor, ask them the questions about anything you get in the mail, but most of the time it's trash. Just be aware of that. It just lets everybody know out there that there's a big marketing opportunity because now you're a homeowner. So congratulations on your closing. I hope that kind of brought you some clarity and kind of a condensed aspect of all this. And any questions, reach out, man. Look below. There's some other video links you're really going to like in the description here. And I look forward to hearing from you soon. Have a great day. Bye-bye.